Commodity prices of the rural kind are playing a big role in Asia's economic fortunes at the moment. HSBC's chief economist, Paul Bloxham, has been travelling through Japan, Thailand and New Zealand talking to investors, and he joined me in the studio a short time ago. Paul Bloxham, welcome to the programme.
Thank you.
Well, I see today tens of thousands of people protesting in India about rising food prices, and the big worry over Asia seems to be inflation.
That's right. It certainly is. These economies are back to operating at about capacity, and what's happening is the economies are putting pressure on food prices globally. We've also had a couple of supply shocks globally in terms of lost crops, which has meant that food prices are rising. And of course, when a large share of your population spends the bulk of their income on food, it can be quite disturbing to an economy.
How is the unrest in the Middle East and rising oil prices also playing into this?
Well, I think that's part of the trigger for the unrest in the Middle East has been the rise in food prices, and then of course that triggers the uncertainty about oil supplies, which has meant that globally the price of oil has gone up, and of course you get a feedback loop there.
Back into Asia.
You get a feedback loop back into Asia, yes.
Is it just food prices that are contributing to inflation, or is it a bigger worry now?
Well, we think that there's a broader story going on in Asia. These economies are now back to operating at trend and starting to grow beyond trend, and that is putting pressure on prices beyond food and oil. You're seeing it in core measures of inflation, and they're starting to pick up. And the other big part of the story that's interesting is that the Asian cycle in inflation has actually disconnected from what's going on in the rest of the developed countries.
So what's the risk here?
Well, I think the key risk is that they are unable to contain inflation. It rises too much, and then at some point in time they really have to slam the brakes on to slow those economies down. I guess the key risk there is that it will slow those economies, but it will also mean that commodity prices have to come down sharply, and of course for Australia that would be a big story.
In the meantime, as inflation rises, though, what's the impact for Australia?
Well, as it rises, in principle, it puts more upward pressure on commodity prices and boosts income that's flowing into Australia. And of course, we're in the throes of a massive mining boom right now. We got some information on that today showing that it's going to continue for a substantial period of time. And I guess that investment is being supported by the fact that commodity prices are at high levels. So as they rise further, there'll be more income and more investment.
To what extent does other Asia depend on China, in many ways like we do?
Very much so. So I just visited Singapore and Bangkok last week. I was in Japan this week, and it's very much the story that all of those economies are tied into what's going on in China.
And finally, what about the investment market within Asia? Where are they looking to put their money?
I think there's growing interest in moving their money to assets that are not US dollar denominated.
So us?
Australia is one of the candidates. Another is New Zealand. There's interest in the Canadian dollar as well. I think in general, central banks and funds managers are sitting on large amounts of US dollar assets, and they are concerned that as their exchange rates need to appreciate at some point in time, that might be a capital loss for them. They feel they need to move away from that, and so they're looking for alternatives, and Australia is one of them.
Paul Bloxham, I thank you very much for coming off the plane and straight in here. Thanks.
Thank you.